Okay, so Mark Hopper, loud and clear, fantastic. Okay, Charlie, for those of you that haven't, I know we've done a few events with you over the last sort of couple of months and years even, but those of you that might be new on the webinar today, Charlie Burton is one half of Easy Trader. You can see the logo up there, the bulls and the bears. Easy Trader is a trading education company offering mentoring, live trading rooms, all sorts of goodies. But just yourself and your partner, Kim Watson, are traders first and foremost, and you offer all these things. I'm sure you can expand on that, but we were especially interested in the trading challenge that you completed a couple of years ago, turning a $10,000 account into $100,000 in 2 years, and we know you've set the bar rather higher now for this new challenge. So let's find out how you're approaching this.
Well, thank you, Simon. What you say about how we're approaching this, I had to laugh actually, Simon, because I didn't know what the presentation today I was going to deliver, and I looked at your email and it said day trading strategies I use. Simon had obviously just gone off, made up this presentation, and then I saw it. So Simon, this is fresh because I've put it together this afternoon, this presentation, because I read your email. For oh my God, I thought I was doing another 50K to a 500K presentation. Obviously I wasn't. So yes, I put this together this afternoon, so it is hot off the press. This is a live example, so to speak, from a trade that we just took in the trading room this afternoon. So it was not bad timing, actually.
Terrific. I like to keep you on your toes, Charlie. That's all I can say. Thank you very much.
It works. Yep. Right. I'll crack on. This will be a fairly short and sharp, Simon. So I'll get this back on time because you know me, I don't like talking too long, but let's go through this anyway. So it's a fairly straightforward presentation, this, and just going to be running through a fairly straightforward trading strategy or trading setup, whatever you want to call it, that I used, that Simon asked, said a day trading strategy. So I've plucked one out that myself and some of our traders in our trading room were doing earlier on today, just this afternoon, after the ECB announcement. So let's go into it. Okay, so this is an intraday setup where you're trading the short-term price momentum. So you're trading the whether it's the examples I'm going to give you is just a long side example, but obviously it can be whether it's a long side or a short side trade. But you're literally trading the sharp up moves that we get sometimes in the markets, and this afternoon is a classic example of that in the euro dollar. And so certain things can happen when we do get these sharp moves, that a market can get very quickly what we call overbought quite quickly. But just because it gets overbought, this is where a lot of traders go wrong, because on a day like today, it's a classic day where the euro dollar went firing up after the ECB announcement, and then a lot of traders at that point would be thinking, oh, it's overbought, I must sell it. And so often, that's why I just heard at the back end of Bo's presentation that so many traders fail. And one reason I think why so many traders fail is because, especially when they're new, is they think that a market's gone up a lot and it can't go any higher, or it's gone down a lot and it can't go any lower, and they just stand in front of it like a freight train. So and that's how one way they can decimate accounts with lack of financial discipline and risk management. So what we're looking at here is a point where a market gets overbought, but actually then we're looking to go with that overboughtness, shall we say. We're just looking for a small pullback to then get back on in the direction of the prior move, whereas a lot of traders are trying to short at that point. And I always say, when we see a big move in the markets intraday, that there will be traders all around the world trying to short this market, because they're constantly looking at stochastic indicators and things like that, which are fine. They have their place if you use them correctly, and trying to do the opposite of what that move is, when in actual fact, if the market gives you an opportunity, you want to be using it to buy. Right, okay, so We're looking for price to be moving higher on the, bear in mind this is obviously an intraday setup. So I'm using the 5-minute, 15, 30 and 60-minute charts. So I'm looking at all of those, and I will look out to the 4-hour charts as well. So I want to see that the price action is, is moving up nicely across all of those time frames. So that's the first thing I'm looking for. And then I use an RSI indicator, so simple indicator, just with a 6-period setting. So that's not a standard setting, a 6-period setting. So it's, I think the standard RSI setting is probably about 14. Some people use 21, but so it's a shortened setting, and I'll go through why we use that in a short while. But anyway, so we use an RSI indicator with a 6-period setting, and then we're looking for a reading of over 90 on the RSI. So the RSI range goes from 0 to 100, and so if it's a buy, that's if the market's been going up, we want it to be over 90. If it's the opposite of a buy and we're setting up on the short side, then it would be a reading of under 10. Okay, so then we're looking for a pullback in price to then get long. So this is what I call an extreme move. We call it an extreme. So an RSI extreme, as we call it. So anything above 90, we're saying the RSI is extreming on that setting in the short term. And then what I'm looking for is, it's telling me that that market's overbought at that point. And then I'm looking for that pullback so that I can then get long to carry, to go with the overall price momentum, which is obviously still to the upside. So looking for a pullback to any sort of support area, doesn't have to be a huge pullback, could be a pullback into a moving average or anything like that that you might use. You can customize this yourself. So the nice thing with this setup is that you can take it away and say, all right, okay, what can I do with this setup? When I see an RSI reading above 90 or below 10 and it's a buy or sell setup, how can I use this information, and how could I devise a strategy around that? One of those factors is looking at what level of area, what area of support would you look for. So you're not looking for a huge pullback, just a standard sort of 3-bar pullback or anything like that. And as long as the risk to reward works out, that's the most important thing. Then it's fine. So the target is the prior closing high, and then I've put manage it out. And we don't have to target the prior closing high. I'm going to show you all this visually in a moment, so just bear with me. I'm just giving you the text at the moment. Then we're going to go through this very example that I took this afternoon. So like I said, it was quite handy when I read that email, and I thought, oh, I've got to put something together for this presentation this afternoon, which I wasn't expecting. That we had this prime example here today. So the target is the prior closing high, and then I then manage out. So you can just run it to whatever levels you want to, or you don't have to always target the prior closing high either. If you feel that there's much more upside to come, then you don't have to do that. Okay, so let's have a look at this afternoon's trade. So first of all, let's go into a chart here. I've got a few bits of information on this chart, so we're going to walk you through that. Let me bring up a pen. Okay, so first things first, we've got this RSI down here. You can see that the RSI reading, I've got two, this is the 6-period RSI. I've got 2 red lines on the chart here. One is at 90 and the other one is down at 10. So visually, I just have those put on so I can very quickly see whether we've got to 10 or 90 or whatever. So you can see that the RSI, as the euro dollar went firing up earlier on this afternoon after the ECB press conference, that we could see that the RSI very quickly got what we call short-term overbought, or what we call an extreme reading in the RSI. So above 90 is we call an extreme reading. So nice price action to the upside. Now, of course, when the press conference was going on, there may well, some of you may say, well, yeah, but couldn't I have got long before that? Yes, you could do, but that's not a setup that I'm discussing here today, that type of trading. I'm discussing a particular type of strategy and setup, which doesn't rely on news, and it just so happens that obviously we had that news out today. So this doesn't rely on news. So the other thing to bear in mind, I've talked about the prior closing high. So when we've got the RSI extreme, which we can see was up at 94 or so, the closing high up here was at 156.65. So you can see it there at the time. 115.65. My apologies. 115.65 on the euro dollar. So if we get the pullback, so what we're looking at is this. If I write this on, we got the nice up move. Then I'm looking for a pullback with the closing high up there. Oops, if I can draw across, being the first target. So that's what I've said so far on the text on the previous slide. So we've got the extreme up here, the extreme reading up here. We get the pullback, so the entry is somewhere down here. Hopefully, right down at the bottom. Today it was. I couldn't have actually got in any lower, I don't think. Maybe 1 pip, but anyway, it's just one of those trades which was just hit the sweet spot. And then when it comes back, price comes back up to that prior closing high, which we're talking about in this instance, is this the top of this green candle here. So the closing price, not the actual wick, not the upper wick. I'm talking about the closing price, because that's what RSI is based on. It's based on closing prices. So I'm not basing it on the actual high. But when price comes up to there, you have an option. You either bank half, so bank half profits when price gets back up to the closing high, or you could say, well, do you know what I'll do instead of doing that and then run the rest. If it goes higher, then you can run the rest. Or you could just say, well, what I'll do is I'll just move my stop up. So I won't bank half, and I'll just see if it can carry on breaking higher. So again, there's all these different permutations and options that are available to you just from a single trading strategy or trading setup. But the odds of someone actually, a newer member in our trading room today was actually asking about the odds of these setups working out, and it is. I hate using probabilities because I think that statistics can be manipulated so easily, and when we start talking about win rates, I hate talking about win rates because I think that that's what novice traders want. Novice traders want people like me to say, yes, here you go, here's an 80% win rate setup, because people just want to be right all of the time, and it's not necessarily the most profitable way all the time, just looking for high win rate strategies. Having said that, this has an 80% roughly success rate, but I have to warn you, although it has an 80% success rate, there are certain situations when this won't pull back enough for it to be warranted to take a trade. So what can happen is if I draw, let's turn the pen off. If I can, there we go. What sometimes can happen is you get the setup, so you get the extreme up at the high, and then you get a down bar, and then it goes straight back up again. Well, the risk to reward at that point to buy at this point here, it's just not worth taking. So although statistically it's within the stats that yes, that one's worked out if you were testing it all, it wouldn't in reality be something that I would be bothering to trade some of those sort of setups. So I'll just make that very clear right now. So yes, statistically there are good odds with this setup, but you're not going to get all of them where they do enough of a pullback to make it a worthwhile from a risk reward perspective. But anyway, that's effectively the setup there, and you can do, like I said, different things with it. You can take half when price gets back up to the prior closing high, or you can just trail your stop up and try and run for a bigger target. So let me just get this. Yeah, I think I've got that off now. Good. Right. Okay. So next slide. So what I've got now is this just gives you the perspective of that 5-minute chart, the 15, the 30, and the hourly. So I've just got them crunched down. So let's bring up the pen again, so you can see we've got the 5-minute chart over here on the right-hand side. Then we've got a 15-minute chart, and then the 30, and then the hourly. Okay. So this is what I'm looking at in real time. So what I've got down the bottom, all these lines are in the main are some moving averages. So just like standard moving averages, like a 50-period moving average and a 200, and then some shorter term moving averages as well. But down the bottom, I have got an MACD indicator, just standard settings with MACD, and we can see that the MACD histogram across all time frames was firing up on the 30 and firing up on the hourly. So what I've got is on the 5-minute chart, I've got an RSI extreme, so RSI reading of greater than 90. I've got price action all firing up. I've got the momentum, the MACD indicator all firing up to the upside. So if you had like a number of check boxes that you'd be looking for this setup, for the RSI extreme setup, you'd say, right, okay, what's the price action like? Check. What's the momentum? What's the MACD like? Yes, check. All of these check boxes where you can say, yes, this is all lined up. We've got a reading over 90. Price action's good. Momentum's good. Check, check, check. So that's what I'd be looking for there. Let's turn that off. Then I go around, this is what if I go back one, so this is what all of the charts were looking like, all crunched up. But if I go to the next chart, all I've done is showing you what the hourly chart was looking like at that point. So again, I've got crunched up moving averages all turning up as well, which is all good. I like seeing all that. I have like a 5 and an 8-period moving average down here, and a 21 or 20, whatever you use. They're all starting to turn here as well. Plus, obviously, you can see the momentum kicking in down the bottom. And it was very obvious. There are certain things in the markets which you could argue are obvious or not. But to me, the momentum, once we saw this up move here in the euro dollar, it was obvious that, I hate using that word, but there were good odds of the euro dollar coming up and wanting to test these highs, if not break out. So we have obviously seen that breakout, and I wanted to see that 116.16 level. The 116.16 level was important because it's the spike high of 2016, so a really important level. So the odds were looking good for a run up into the 116s. Not necessarily for it to have happened straight away this afternoon, even though it did. I'm going to show you that chart shortly. But at some point it looked like it was on the turn. And this is the 4-hour chart, but this is the 4-hour chart. I've taken this a screenshot a little bit later once it had already gone up. So obviously that's already up at 116.34, and I've taken the screenshot. So, but the 4-hour chart, again, we can see the overall trend. So the one thing with the 4-hour chart is that we didn't have the MACD bars there. But again, the 4-hour chart there is still negative, but the 4-hour chart is always going to take that much longer, and by the time you wait for the 4-hour, then you could be too late. But up to the hourly chart, all the momentum was really good. The medium-term momentum, which is what the signal lines are indicating, is still positive anyway. So the medium-term momentum, because they're above zero. So we were looking good from a price action perspective across the board. Okay, let's now drill this back down to the 5-minute chart. So this is what happened next. So we've had that extreme reading. So let me just bring the pen back up. We've had that extreme reading back up here at that high, like I showed you, at 115.65, I think it was. And so I was sat in the live trading room with our traders and saying, okay, well, we'll see if we get a bit of a pullback. And so we were looking for a pullback right down to, I mean, this is just something that I use, these black lines. It doesn't really matter. You can use whatever, a moving average or something like that. You could use something like a 10-period moving average, which would be about right. I have what I call my bands, and there's something which I use. But so we were sat in my trading room this afternoon, waiting to see if we were going to get that pullback. We've got the pullback. We got the entry literally right at pretty much at the low there, because the RSI has extremed up here. So what we're looking for when we've had that extreme is for the market to pull back. If you remember right from the first slide, it's got overbought in the short term, pull back, and then to see if price can get back up to this high, this extreme high. So let me just see if I can change screen. There we go. Right, so we're now onto the next screen, so we can see that we've got the pullback, and then we've got back up to the prior high. So at 65, bear in mind the pullback level was around about 42. So it was about 23 pips in that to that first target, and then we were then looking to run the second target. And in fact, still running that trade right now, even though we are nearly 100 pips, and we certainly have been 100 pips higher here this afternoon. So, and it would be my choice how much I want to run it. But yes, I'm still in the second half of this trade. So it's this afternoon. If I wanted to close out now, it's a nice little £1,000 trade. I say little. It's a £1,000 trade on that account. Excuse me. If I'd have wanted to have banked out, but we cashed out half here at the prior high, the closing level here. That's the important thing. It's the closing level, because that's where the RSI is based on the close. Then we got the pullback. You can use whatever sort of moving average you want. But a moving average is usually appropriate for a strategy like this. Something like a 10-period moving average. You could play around with it, but and then as long as you can get that risk reward, like I said, get a good risk reward. The stop was down at 25. So we had about a 17 pip stop for a 23 pip target to first half. So the risk reward to the first target was a bit above 1 to 1, whatever that works out at from a risk reward perspective, 1.2 to 1 or something like that. But of course, if we're trying to run the second second portion, then all of a sudden this is where the cream comes in, because then, as you can see over here, we're now up 100 pips. And so you're at 4 times to 1 on that second half, as far as risk reward is concerned, and this is what basically happened next. So, okay, today was a wonderful, a great example, but it was an example where all these things come together, and they say, and people say, oh, maybe you got lucky this afternoon, and say there's that old phrase saying, was it, luck is when preparation meets opportunity. And as traders, we are constantly prepared, and that's my job, to constantly be prepared. I have a number of strategies in my suite of strategies in my head, and I try to pull out the most appropriate strategy, which I believe is most appropriate at the right time. And today was one of those days where we had everything lined up: the price action, the momentum using something like an MACD indicator, the RSI extreme, everything lined up to say, right, okay, we're going to get into this trade, we'll bank half profits, and then we'll try and run the second half of the trade. So it was just lined up quite nicely today. Okay, and just to make sure that you know that this is real, or that it was a real trade that we took, I took a couple of screenshots from our trading room. This is our online trading room where myself and now day traders are. So you can see the here it was. Oh, the entry was at 43. Sorry, I lied. I said 42 just a minute ago. I thought it was 42. It was 43. Stop at 25. There you go. And first target was 65. There you go. Then a bit later, so that was at 214. At 231, we'd hit the first target, and stop moved up to 40. And you can see a bit later, we got one of our newer traders that said, best trade I've been in for a while. So there you go. So just giving you information that this is all real from this afternoon. So this is the same chart, but just with a black background. I use a different charting software when I'm in the trading room, because then I can see my white charts off screen. So if anyone says, why have you got a black chart up here in your trading room? It's a cheaper piece of software, which is just basic, but it does the job for projecting to our traders, so that I can see all my other white charts off screen. So you can see this was the, if I bring up the pen again, this was the extreme high at the top of that candle. This was the pullback here. It's exactly the same, obviously, chart and then the run that it had this afternoon. But again, you can see what's nice within our trading room. We've got Johan said, I'm out. Sultan here said he banked, re-entered and banked again. Humble, I only got half an entry, banked half when you did, and then out at 116.10. So he had, what did we get? He had about, what's that? Nearly 70 pips there. 67 pips on his second half. Tom here banked half, holding half. Peter closed half at 116.13, the rest at 116.50, which it hit this afternoon. So he must have, yeah, so on his second half he had, what's that, what were we in at? 40 something. So he had over 100 pips on his second half there. So, and then Pitbull, hourly 4 just getting I don't know, that was maybe some other part of a different conversation, because obviously the chat's just coming through, and so people are having different conversations at different times. So there you go. That's the setup here this afternoon. I'm just going to go into the do a recap here, and then we can take some questions. And if you want me to run through any point, then of course I'm happy to take some questions. I don't need to spend 50 minutes or anything to go through this strategy, but of course I will take questions on it as far as my presentation is concerned. I'd happily just give the setup there. You can take it away, test it, and if you want to use it, incorporate it into your trading, then you can do that. But I'm happy to take questions on it. Using price momentum in the RSI, looking for the pullback after the reading of 90 or more. And obviously we reverse all of this for shorts. So short plays, remember, it would be a reading of less than 10 and everything else just in reverse. And if the risk reward works for the first target, the trade is on. And I pose the question, is the trade worth running? So those are the things that we have to ask ourselves. Sometimes we might say, no, I can't see anything beyond it going back up for that prior high, whereas other times like today you can see the potential for a bigger move. So that comes down to your own discretion as a trader, which is nice. Oh, right, okay. And if you would like, on the back of today, if you would like 2 free days in our live trading room, just go to easytrader.com/round the clock. And that will just put you on the list for when we next do 2 free days in our live trading room. And so we haven't actually got dates at the moment, but they usually will happen within the next month that we will actually do the next one. So if you would like 2 free days, so you can just see what goes on in our live trading room. But it's like Simon said earlier on, it's not just me, it's Kim as well, the pair of us, and we split our days, the days in the trading room. So Kim will be on for let's say the morning session, I might be on in the afternoon, or vice versa, and it gives people a good mix between our 2 trading styles as well. So you've got 2 different traders there guiding you through. So you just log in, sit back, listen along, ask questions, whatever. It's your 2 days to get as much out of us as you want to, and watch us as we're live trading in front of you. So it doesn't get much better than that. I think Simon's popped it into the your text box as well, your chat box. So that's that. Have we got any questions here? And I do hope we have.
Hi, Charlie. Oh, yes, we do. We've got a great interactive audience today, which has been really good all day. If we might just rewind a little bit. First of all, Justin was asking, what is the average winning percentage of this day trading setup?
I've already covered that one.
You've covered. What was the risk-reward ratio?
Yeah, again, okay, so like I said earlier on in the presentation, we have, like I said, it's tested at 80%, around about 80% as a win rate, but don't go and get too excited. That's what I said within this, because I hate statistics in many ways, and I think they are abused by trading educators a lot of the time as well, because traders out there who are looking for education get sucked into high win rate strategies because that's what's sold to them, and yet you and I both know, Simon, that that's not necessarily the best way to be trading. But this, yes, has an 80% success rate, but like I said in the presentation, some of those trades you wouldn't be able to actually trade because they don't pull back far enough. So although it would still play out and work out, the risk-reward ratio wouldn't be good enough at that point. So that answers that part. What is the risk-reward ratio? The risk-reward ratio is whatever you want it to be. I'm showing you the setup, and I've shown people the pullback, like in this situation today. I've gone through what our risk was and what the reward was. So, and it's down to, are you just running it to the first target, or are you going to try and run it and get a better run like I've had this afternoon with our traders? So it's partially mechanical and partially discretionary. So as far as you, the trader is concerned, you get the choice as to, well, do I want to run this trade, or should I just run it up to that prior high and then come out, and that will be whatever my risk-reward ratio is. So it's not static like that, and I'm really, really against static type trading, because I've been around for 19 years in this game, and I've yet to see static trading work out continuously. If you just keep, if you said, well, I'm going to take this strategy and I'm going to always have a stop here and I'm going to have a target here, there'll be times, the markets are organic things. They are constantly moving and adapting and changing, and you as a trader has to adapt with them. So there will be times what might be right now an appropriate risk-reward ratio or target, shall we say, may not be appropriate in 6 months' time, let's say. So what's better is if you can actually read the markets and place the strategy into the context of what's going on any one particular day. So that is what's much, much more important. So take the core strategy and then use it in conjunction with your chart reading skills to say, do you know what, there is a level up that much higher, I'm going to run my trade to that level, because I can see the bigger picture once I zoom out to the hourly charts and the 4-hourly charts. That looks like where it's going to be running to. So yeah, don't be too blinkered. Use the charts on any one particular day, and that's what will give you your risk reward on any one particular day.
Okay, thanks, Charlie. Okay, Brad and Alan, both asking about where do you place the stops?
Yeah, that's a good question. It has to be an appropriate level relative to where you're looking as a target. So if I bring the pen up, so we know the target, the first target, is the top of this green candle. So we know that's the first target. So if I'm going to get in down here, which is where I got in today at my black level line, I know that if I go and put a stop down here, then that means I'm risking this much to only make this much, which would be a bit wrong, really, wouldn't it? So there's no point in me doing that. So I know that, get rid of the, okay, put the pen back on. So I know that if I'm looking for this level as my first target, bear in mind I might be able to get more of a run on the second half. And some of you might say, no, I'm just gonna run it on this. I'm not even gonna bother with the first half. I'm just gonna use the whole setup to just see if I get more pips. But anyway, and your entry, like my entry was here, then I need to look at a level which I deem is appropriate to say, right, okay, if I have my stop, which is where mine was down here at 25 today, is that giving it enough breathing space? And that, to me, looking at the 5-minute chart, was giving it enough breathing space by putting it down at 25. So you would need to just identify on your charts, okay, where am I going to give it enough slack, enough room to breathe, because I might not be exactly right on my entry, might want to just overshoot a little bit. So giving it enough room to breathe, but without the risk-reward ratio becoming inverted. So that is my answer there. So like I said, I'm showing you a setup here which people can take away, they can test themselves, and they can find their own risk-reward and their own stop placement. So you could, for example, just use an ATR based stop if you wanted to. Just use an average true range based stops. There's all different ways of using stops. I use my stops just visually, which is usually, funny enough, I don't think of ATR, but usually when I'm looking at a chart, then I get a gauge as to, okay, if we come into here, we might want to overshoot down a bit. Okay, I need to put my stop somewhere down there, and that's probably about 1.5 to 1 or 1.5 ATR, or at least over 1 anyway from where my entry is. So it is very much an individual thing. Just make sure that wherever your stop's going to be, that you don't end up with an inverted risk-reward ratio.
Okay. What about the pullback? Alan's asking about, does it have to pull back to the 23.6 fib level?
Does it have to?
Does the
I don't know.
need to come back?
Sorry?
Does the pullback need to come back to the 23.6% Fibonacci, therefore?
I don't know. It depends if you use Fibonacci's or not, doesn't it? So I don't use Fibonacci at all. So I've used Fibonacci, in the past, but I don't use it these days. So again, that's not a bad little. If you use Fibonacci,
Okay.
then you could test this with Fibonacci pullbacks to Fibonacci levels. So if that's what you want to do. So I don't use Fibonacci, so it means there's nothing in
Okay.
it for me. But yeah, so you could test it to a 23.6 or to was it 30 whatever it is, the next one now, 34%. So it's 38% retracement, sorry. It's been so many years that I just don't use fibs. But yes, you could certainly test. And like I said in the presentation, you decide where is an appropriate level. Like I said, I gave you a guide and said, look, you could just use something like a 10-period moving average, and that would probably be in the ballpark, which wouldn't be a bad level for it to pull back to, and that would be in the right ballpark to be able to find a decent risk-reward ratio. But some of you are already thinking ahead and saying, well, actually, I use fibs. Yeah, have a look and test it with some fib levels. Yes.
Okay. Ranjit is keen to know, why did you use the 6-period RSI?
I've been using the 6-period RSI for many, many years. Probably, I don't know. I don't know. I can't even remember how many years it's been now, but 10 years plus. What were we, 2017? So yeah, well over 10 years. And I can't remember why all those years ago we devised the 6-period RSI. I know it was along the lines of, we wanted an RSI which was a bit more responsive, basically, than the slower moving 14. So we've just used it for so many years. I can't remember the specifics of why we got down to a 6 all those years ago, but that seemed to be the sweet spot, and it's just something that I use. So I can't remember anymore as to, it's like you devise strategies and people say, how did you come up with that strategy? You're like, do you know what? It's been so many years, I can't remember the specific reason as how I came up with that strategy. But actually, I remember why I came up with this strategy, because we would often look at the RSI when a market was going up, and we'd say, oh, look, there's an extreme coming up there. And what actually happens, if I go to the next chart, is that when price comes back up, quite often there would then be an RSI divergence, which at this point, at this moment, there's an RSI divergence. And sometimes, if the conditions are right, it will come up there, make the test these prior highs, and then will actually diverge and come off. So because there's a divergence in play. But it was several years ago, and I thought, well, okay, if we do get an extreme and price pulls back, I know there's damn good odds, then I tested it, of price coming up to retest those highs. Well, why don't I trade those odds? As that's how that whole strategy came about. A lot of the strategies that we do just come about by pure screen time, by just being in front of the markets as much as we are. You observe and you just notice these little snippets of information which take place on your charts in front of you, and then you see these things happen enough time, you think, why don't I go and test that, and I'll see if that actually works, and that's how they come about. So the RSI itself, I've long since forgotten why we got down to a 6, other than the fact I know that we were looking for a shorter, a quicker moving RSI. But it was so long ago I can't remember. But yeah, that's the reason how this strategy came about, because of the old divergences, and then saying, well, actually, I'll trade it up to the point where it divergences. And if all the momentum, like in this example today, is firing up, well, in fact, I should hold on to some for a bigger move. And so there you go. That's a little snippet of why this strategy came about.
Okay. Tina says, should we just forget about trading systems then?
Yes, I hate trading systems. Someone shows me a trading system that works, then by all means prove me wrong. I've worked with developers over the years of robots and all sorts, and which is consistent over the longer period. They can have little spells of good stuff, but I've yet to see something which is. I'm sure there must be some out there which are good. And there will be ways of making trading systems profitable, I'm sure, if you blend them and all sorts, and if you're constantly adapting them. They have to be adapted to the market environment, because as a discretionary trader, you do have that ability to adapt to the markets, because that's our strength as a trader. We can see what's going on in front of us. A system can't do that. A system can't pre-program itself to adapt. You have these things called self-adaptive trading systems, but I'll kid you not, they are nonsense. They're rubbish. The institutions in the city still can't get self-adaptive systems working. They are constantly having teams of programmers and quant analysts redefining their systems. So how are we as independent traders going to have systems which are going to be as good? So I'm sorry, but no, I'm happy for someone to prove me wrong, but there's a huge amount out there on the internet which would lead you to believe that these systems are brilliant, but I just know that that's just good marketing. Sorry, but I've yet to see a system, and I've worked with institutions and I've worked with all sorts of programmers over the years, and unfortunately I'm always proven to be disappointed. I think the one thing with trading systems, though, is that people want the easy way. They want the easy way to success in trading, and I get that. But unfortunately, there's no substitute for just rolling up your sleeves, getting a bit dirty, and learning the hard way. The A plus B equals C approach, it's what lures people in, unfortunately. But and then people realize that trading isn't quite that straightforward. You do have to learn a bit more, and you do have to be able to adapt to the markets, and you can't just have like I said, a 1 + 1 = 2 type trading system or method, because the markets are constantly evolving, and your method would need to adapt with it. And the only way for you to adapt your method is to use your discretion and your skills as a trader, so you can adapt to the markets.
Charlie, Justin says, is this a continuation trade setup? Or
Yes.
a counter trend?
No, it's continuation, because if you go back to what we were looking at here, was it a Martin?
Justin.
Simon? Justin. Yeah, because it was a pullback trade. So the market had a good run, then it did this pullback. That's why we got long for the continuation run higher. So yes, it was like a trend-based trade. Yes, it was a continuation after a pullback.
Okay. What about volume? Do you use that in any way for confirmation? Alan's asking.
Sorry, I know there are volume bars down at the bottom, and I do have them on that chart where I was taking the screenshots from today. There are times when I will use volume, but the volume had nothing to do with that trade setup today. It's just that it's just on that screen when I was taking the screenshots. So I will look at volume at certain times in certain environments, like when there are spikes and things. There are certain times I can use volume, but it's got nothing to do with that setup today. No.
Okay. Richard says, so you enter on a 1 hour breakout. Is that?
No. I would. No, it's a pullback. The market had this run up, if you remember. Then we waited for the extreme, which was there on the RSI, and then we waited for the pullback to then get long. So got long on the pullback, not on the breakout. By the time it gets back up to this prior high, we're already banking half profits, remember, and then we run the rest after that. So no, it's not a breakout strategy.
Gotcha. Fantastic. Marguerite wants to register for the 2 days. I've sent her the link. How is the stop loss determined? I think you covered that already. Yeah. Okay. Do you enter on the touch of the moving average on the retracement?
Yes. Yes, you do. You hit it as it comes down into that rising support level of the moving average. So yes, you do. Yes.
Okay, fantastic. And how many times have you mentored Alessio Rastani? I don't know if you do. Do you? Is that a name? familiar to
How
you?
many times have I mentored Alessio? That's a off the ballpark. But I have mentored him in the years gone by. Yes, I have coached him. I don't know, a few times over the years, several years back now. But yes, I have mentored him. Yes.
Oh, great, great. Yeah, there we are. Okay, I think that brings us to no more questions at the moment. So
Cool.
we've covered a lot
So
there. Fantastic, Charlie. Thanks.
well, I do hope I don't ruffle too many feathers when I get asked some of these questions, especially when people start asking me about systems, because you know how I feel. And I know that sometimes a bit of a conflict. There might be other people talking about systems, I don't know, but yes, it's just something I have a strong personal feeling towards, and so when I get asked about things like that, then I'm going to have to just give you my honest answer based on my 19 years of experience, which maybe I've just not come across a system yet, which is all conquering. But I do get to interview people who work in the city, and they are working with AI intelligence systems, quant systems, and all sorts. And the majority of these systems do not make money for the institutions. And so the institutions make their money from marketing these systems and making money on their commissions and fees, but the actual systems alone don't necessarily make money.
Final couple of questions, Charlie, if you're all right. Does this trade setup only work on the 5-minute time frame?
Oh, great question. Yes, because this will set up on other time frames. It will set up on a 15-minute chart as well. So it'll set up on a 30-minute chart. And yes, absolutely, it will work on other time frames. Yeah, good question.
Okay, so it will work on other time frames, not just the 5 minutes.
Yes. This is just a great example today because I often use the 5-minute chart as an entry tool, but it's always based on the higher time frames. My analysis is always a top-down approach, but yes, we do take them on other time frames as well. Yeah.
Okay. Tina's asking if you still do mentoring.
I do mentoring, but I do currently have I take on a few mentees per year, and I don't take on a lot because I do a year-long program with them, and so they come and see me a few times over that year. Plus, I give them we have telephone conversations every 2 or 3 weeks, so I can only actually mentor a few people in any one given year. I believe Sam, my PA, she has a list of people, and if you wanted to go on the list, then just get in touch with Sam. But I can't just take mentees all of the time. So at the moment, I'm fully booked. But as we get to later in the year or early next year, then there might be some come up. But I don't know. Sam deals with all that.
Okay, I'll just put Sam's email address into the chat box if anybody wants to drop her an email. Fantastic, Charlie.
Brilliant.
Thank you very much indeed, and nothing like dropping in at the deep end with that working state.
I was lucky.
Well, the story behind that, I have to hold my hands up because I did think it would be interesting to see something of the real strategies, and so I sort of put it in as a holding title, always meaning to get in touch with you to then.
Yeah, that's all right.
It didn't
I
happen.
knew. Yeah,
so there we are.
I just chuckled, Simon. When I saw it, I just chuckled to myself. I thought, I bet exactly that. I bet Simon's put that in saying, is this okay, this title? And then you've obviously got busy and stuff. But actually, to be fair, Simon, if I hadn't have taught this strategy, there was another one. Once I'd read this today, I was just going to go for another setup. So it just so happened that as this was one that we took today, I thought, well, actually, it's a great example. We'll just use that one. So it made it easy for me to put this presentation together this afternoon.
It's all come together nicely.
Yeah.
Great. Well, it's been a super presentation. I've enjoyed that, Charlie, as well, and I think everybody else has. So I think we'll let you go, and thank you for your time yet again. And
thank you for having me on.
These links and so forth as we go through. So many thanks indeed, Charlie. And if any more questions come in, do just direct them to myself, and I will forward them on to Charlie for that. So thank you very much again.
Thanks, Simon.
take the presenter role back from you now. Take care.
Take care.